I'm going to share with you the ultimate guide to avoiding those heart-stopping property tax increases
because they're going up in Los Angeles.
Yesterday, the Board of Supervisors voted to put a property tax increase on the March ballot to pay for more fire crews and equipment. The average homeowner would pay $90 more a year.
The county, we're expecting to generate about $20 billion in property taxes from this year's assessment roll. The assessment roll is the assessed value of all property of the county, and this year it is about $2 trillion. Which means the market value is considerably higher.
Okay, so hold on to your seats because we're going to take a closer look on how and why it's creating this spiraling effect. In Los Angeles, property taxes are calculated on the assessed value of a property. According to Proposition 13, the assessed value in California is reassessed to the current market value only when there is a change in ownership or the completion of a new construction. Proposition 13 limits the increase of the assessed value to a 2% ceiling, which that means it can't go beyond 2% of the new value of your house. During the time when purchasing a property, the sales price or the purchase price of the house, which are pretty much the same thing, is the market value, and that's what's used to calculate the property tax. When the property value increases, so do property taxes. And believe me, these hikes can catch you off guard and put a significant dent in your pocket.
And because we've fallen behind the 8 ball for months now, that means all homeowners out there, especially here in the Southland where property values have been soaring, should be prepared for a real kick in the teeth when it comes to their property taxes.
I've gotten calls from clients freaking out and asking me, what's this or what are these charges? But fear not, my friends, I'm here to equip you with 4 essential guides to help you navigate this treacherous landscape, like Gollum from The Hobbit, and avoid those dreaded hikes in property tax. Welcome back, folks, to LA's Real Estate Talk. I'm John Atamian, the game changer and the realtor with the Atamian Group. And today we're going to be diving into a topic that affects many Angelenos homeowners, property tax hikes. Now, before we get started, let's understand why these hikes can be so jaw-dropping. When your property is being assessed, it applies a tax lien to it. This occurs when there is a change in ownership, transfer, or it's a new construction. In 2017, lawmakers established accessory dwelling units in Los Angeles County, also known as an ADU. There are many homeowners purchasing many properties, having space for ADUs. When a homeowner builds an ADU on their property, this in turn generates rental income, but for many years,
Los Angeles has been experiencing a shortage in inventory.
Lawmakers brought this law into existence for many reasons. The first reason is to generate rental income. Second, to increase property resale value and home equity. And last, to create private living spaces for others. This brings it back to the main reason for the increasing property tax is due to higher home costs that have ADUs. In the short term, home prices increase and property tax assessments will fall behind. But in the long term, things will be taking a turn.
Property tax bills keeping pace with the values of their property. That's great over the short term. Over the long term, well, you know where this is going. Our property tax assessors are finally going to get their act together eventually, and you know what's going to happen. Your higher property values are going to once again be reflected by higher property taxes.
Here are 4 guides that I have put together that can help you save some money for those rising property taxes. Guide number 1, stay informed. As property owners, we must pay our property taxes in 2 installments each year. The due date of the first installment is November 1st and the second is February 1st of the following year. Each installment has a delinquency date. If you pay the first installment by December 10th, it becomes delinquent. It also is true for the second installment. The second installment must be on time. If payment is made after April 10th, it's late. The Treasurer and Tax Collector's Office will impose a 10% penalty on each installment when a property tax is delinquent. Also, they will charge a $10 fee on the second installment. This amount is significant and we must pay them on time. It would be best to stay up to date with property assessment notifications from Los Angeles County Assessor's Office. Every year on January 1st, the County Assessor's Office assesses all taxable property in the county so that the owners pay the correct amount of property tax to support our local government. You might wonder what taxable property means and what support we pay the local government.
Pays for police and fire and hospitals and roads and parks and libraries. It ensures that government has a steady source of income to pay for those services.
According to publication 29 on Proposition 13, taxable property is real property. Real property is defined as 1. A person that has possession of, claim to, ownership of, or right to the control of land. 2. All mines, minerals, and quarries in the ground, all standing timber, whether or not belonging to the owner of the land, and all pertinent rights and privileges. And 3. Any improvements to the ground, which include all buildings, structures, fixtures, and fences erected on or affixed to the land, all fruit, nut-bearing, or ornamental trees and vines not growing naturally and not exempt from taxation, except date palms under 8 years old. Any of these are real property, therefore regarded as taxable. Now that we understand what is taxable property, Proposition 13 allows adding 1% on top of the 1% taxable property amount for any voter-approved indebtedness. Let me further explain this to make it less complicated than it is. You've most likely received this in the mail if you're a property owner. Take this annual secured property tax bill, for example. Under the details for tax due, it shows the general 1% tax levy on the taxable property. And right below it, it has all the voter indebtedness totaling approximately 1.16%. As a professional realtor, when a buyer asks me, how much would my property tax be? As a general rule of thumb, I multiply the purchase price by 1.25%. Unless there's a significant impact on the assessment, I typically go with that amount. But it's less because depending on where you purchase your property, it can be different for anyone. The Los Angeles County's Assessor's Office should notify you of your property's assessed value for any changes made to your property assessment. Please don't ignore them. Take the time to review it and double check the accuracy of it. At the end of the day, we're all humans and we make mistakes too. Except if you're this guy. Okay, moving on to guide number 2. Challenge your review if you believe the assessment needs to be corrected. You have the right to appeal the assessed value of your property if you think it's too high. Gather any evidence such as recent comparable sales or property defects that may affect the value. You can get these from your local realtor, such as a broker's property opinion, or short for BPO. I had a case where I had to prepare a BPO for a client and they discovered that their assessment needed to be corrected. So present your case to the assessment appeal board and fight for a fair evaluation. Typically, any changes made by the assessor on the property's assessed value should be at current market value. They also may change the assessment to recognize a decrease in value, to correct an error or something that was just simply overlooked. Except whenever there is an assessment due to the annual adjustment for inflation, assessors must notify property owners whenever their estimates of real property are increased. These notifications are usually sent before or on July 1st. So how does the assessor's office know a change was made to the real property? Usually, whenever the property owner applies for a permit and it is approved by the city or the county for construction, it indicates to them that there were changes made on the property. So if an owner knows that a mistake was made on their bill, an appeal process can be filed using an assessment appeal application. This is done through your local Board of Equalization. Guide number 3.
Nope.
What? Guide number 3, take advantage of exemptions and deductions. Did you know Los Angeles offers various exemptions and deductions that can help reduce your property tax burden? Homeowners age 55 and above, severely disabled, or victims of wildfires or other natural disasters may qualify for tax-saving benefits. So before April 1st, 2021, homeowners 55 and older had a one-time use to keep their existing property tax base if they sold their home and purchased a home of equal or lesser value within the same county. For example, you own a home in Glendale with a market value of $1 million. You decide that you want to retire when you're at the age of, let's say, 56, and you move to a different property within Los Angeles County. Under this rule, you purchased a property equal to or less than $1 million. The homeowner could only exercise this exemption only in select counties in California. However, after April 1st, 2021, that same homeowner may receive a property tax benefit even when purchasing a more expensive home anywhere in California, up to 3 times. So technically, what that homeowner initially paid for that property tax could now be transferred to the new property regardless of the increase in the market value. Pretty cool, huh? The parent-child and grandparent-grandchild exclusions. Let's say the parents owned and left behind their property to their 2 children after they passed away. Deceased parents had a living trust and their 2 children are listed as their beneficiaries. To be eligible for this exclusion, either one of those children need to live in that house as their primary resident. This is important because of the benefits of this exclusion is significant. The factor base year plus 1 million of the real property will not be subject to reassessment on the property tax. Anything excess of that amount will be added to the factored base year value. For example, if the factored base year value is 300,000 and the fair market value is 1.5 million at the date of transfer, the excluded amount under Proposition 19 is 1.3 million. The difference of 200,000 is added to the property's factored base year value. Thus, the adjusted base year value now becomes 500,000.
Now you're welcome for the tax savings. Enjoy.
This also applies for transfers from grandparents to grandchildren. There are certain limitations to this, but beneficiaries should seek to consult with their attorney to help them make a claim to get this exemption. These were just 2 of many exemptions from Proposition 19. Other exclusions include new construction exclusions for disabled access, disaster relief, eminent domain, and solar new construction exclusions. And we finally made it to guide number 4, understand Proposition 13. Proposition 13 was passed in 1978, which limits property tax increases to a maximum of 2% annually. So familiarize yourself with the provisions of Proposition 13 as it can provide significant protection
Against skyrocketing property taxes.
I'll leave you a link to the publication below, which has all the details for the appeals process and everything I've discussed about. A piece of legislation that every homeowner in Los Angeles should know about. There you have it, folks. These were 4 essential guides to help you avoid jaw-dropping property tax hikes in Los Angeles by staying informed, challenging assessments, leveraging exemptions and deductions, and overall understanding Proposition 13. You'll be well equipped to protect yourself and your hard-earned money. But remember, knowledge is power, so keep educating yourself on all aspects of homeownership in Los Angeles. If you found this video helpful, make sure you hit that like button and subscribe to our channel for more valuable tips and insights. So stay tuned and be sure to click that notification bell to be alerted for any new releases. Remember, with the right knowledge and strategy, you can overcome any property tax challenge in Los Angeles. Thanks for watching LA's Real Estate Talk. Until next time, this is John Atamian signing off.